Alright fam, let's talk savings accounts like they're different pockets in one big money jacket. Same goal, protect the bag, but each pocket got its own vibe, perks, and watch out signs. Street smart breakdown, no boring banker talk. First up, basic savings accounts. The regular at your local bank. Good, super easy to open. Link it to your checking. Set auto transfers. Grab cash at the ATM. It's safe if it's FDIC insured, up to $250K per depositor per bank. Downside, the interest is usually crusty, like buy one fry levels. Fees might pop up if your balance dips, and some places limit how many times you can move money out each month. Now, the glow-up, high-yield savings accounts, HISAs, mostly online. Good, way better interest. Often no monthly fees, slick apps, great for an emergency fund, or stacking for short-term goals. Downside, rates float, today's spicy, tomorrow's mild. Transfers to checking can take a day or two, no branch to run to if you like face-to-face vibes, and promos can bait you, then drop the rate, so stay sharp. Money market accounts, MMAs. Think savings with a side of checking. Good, can pay higher rates than regular savings. Sometimes give you a debit card, or checks. Still FDIC or NCUA insured if it's a bank or credit union. Downside, higher minimums to get the good rate, possible monthly fees, and usually limits on certain transactions. Certificates of deposit, CDs, lock it in, get that fixed rate. Good, the bank's like, promise you won't touch this money for X months, I'll pay you more. Rates locked, no surprise switch-ups. Great if you know you won't need the cash. Downside, touch it early and you catch a penalty, like losing some interest, sometimes a chunk. If rates jump while you're locked, you miss out. Street tip, CD ladder. Split your money across different terms, 3 months, 6 months, 12 months, 24 months, so part of your cash unlocks regularly. That way you don't get stuck if life happens, or if rates start doing backflips. Credit union share savings, community-flavored banking. Good, member-owned. Sometimes better rates, lower fees, NCUA insurance, same $250K coverage. Downside, gotta qualify for membership, job, school, area, or a small donation. Fewer branches sometimes. Cash management accounts, brokerage or fintech-style savings hybrids. Good, juicy APYs, easy bill pay. Debit cards. They might spread your cash across multiple partner banks to boost insured coverage. One app, many banks in the background. Downside, it's not a true savings account legally, more like a sweep. Rates move. Features depend on the app. If the app glitches, you're waiting. Always confirm where the FDIC NCUA protection comes from. Online versus branch? Online is usually higher rates and lower fees. Branch banks give you humans, cash deposits, and sometimes better service for complex stuff. Pick your flavor. How to choose, quick and clean. Purpose, emergency fund, HISA. Purpose, emergency fund, MMA, short-term goal in 3 to 12 months. HISA, short-term goal in 3 to 12 months. Short CD, money you won't touch for a year plus. CD, money you won't touch for a year plus. Ladder, access, need instant cash. MMA with debit, or a HISA that transfers quick to your checking.